Good morning, everybody. I am Stephen Morris, the banking editor of the FT, here again hosting our next Fireside chat. And I'm joined today by Nick Leeson, former Barings derivatives trader and author of this book back in 1995, Rogue Trader, where he became one of them, well, probably the most famous rogue trader in the world after his positions in Singapore brought down Barings Bank, which was one of the UK's oldest and most prestigious merchant banks at the time. So I think when we'll kick off here is I'll ask Nick to give a brief introduction of himself and his career back in the time and what he's been doing since. But I want to remind our audience first that you can ask questions via the box on the screen, and I will do my best to ask as many of them as possible. I'm anticipating there will be quite a lot of interest in talking to Nick about his past and also what he's experienced since and what he's seeing in today's global financial environment where, I'm sorry to report, we have not seen a significant downtick in scandals, errors, and rogue traders, unfortunately. So I will hand over to Nick to introduce himself and explain how he became one of the world's most infamous rogue traders back in the 1990s.
Okay, good morning, everybody. My name obviously is Nick Leeson, a disgraced banker, probably foremost amongst them. Whenever I'm going to talk about that time, I think it's always important that I preface it with to give you an idea really of what that period of my life really means to me. I was somebody who craved success, wanted to be successful within the financial services industry, will always be remembered for my biggest failure. So that will always be the most embarrassing period of my life. I left school at the age of 18. I went straight to work in the City of London for Coutts and Company, 15 Lombard Street, worked there for about 2 years, moved on to Morgan Stanley in the City of London, and then worked for them in Japan for a period of time, and then was headhunted to Barings when I was about 21, 22 years of age. Started working Portsoken Street, working in the settlements department, looking after futures and options, Japanese futures and options for Barings in London, and then was moved out to Hong Kong to look at some settlement issues that they had out there at that time. Returned to the UK for a brief period of time, working in business development, and then was offered a position in Singapore, looking after the trading seat that they had on the exchange there and activating that so they could start to do more business. So I had a lot of experience of the back office, not so much of the front office, but it actually meant going down on the trading floor, taking the orders, processing those orders. Everything was open outcry. You use your hands to trade with. There were always errors, things that needed to be sorted out on a daily basis, price discrepancies, lot discrepancies. The normal rule of thumb was that you match those trades within a 30-minute period. But the Japanese markets were collapsing, the circuit breakers were kicking in Japan, and rather than taking 30, and the settlement systems were breaking down on the exchange floor, so rather than matching the trades within a 30-minute period, it was often taking 12, 13, 14 hours to realize that you had a problem. And it was on one of those occasions, about 3 or 4 o'clock in the morning, we realized there was a position discrepancy. Knew exactly what I had to do with it, that I had to refer it up the line of management in Singapore and then back to the UK. Nobody was around at that time, so the very next morning I went in to see Simon Jones, explained to him what had happened. He told me to refer it to London. London wasn't open for another 5 or 6 hours because of the time discrepancy, and I took the chance that the market would get back to that level during the trading day. I'd seen it happen so many times in Barings in different parts, be it Japan, London, where trades were warehoused for a short period of time. And I thought it wasn't the big step that it should have been for me at that time. And from there, as the story will tell you, over a period of 2.5 years, not reacting to the situation as I should have done, putting my head in the sand, not freezing, not dealing with the situation. Eventually, over the 2.5 year period, and this is a very encapsulated view of it, it led to £862 million worth of losses and the collapse of a 233-year-old merchant bank. I went to prison in Singapore for a total of 4.5 years, 6.5 year sentence. You get a third off for good release. So I came back to the UK in 1999, and I think I lucked on or found a career in after dinner speaking and keynote addresses at conferences, looking at the subjects of risk management, compliance, and similar things. And a lot of what we see in the markets these days, as Stephen has already attested to, is about poor behavior, poor conduct, and it still continues, unfortunately.
Yeah, I think it's just really interesting to go back to the culture of Barings at the time. And was it normal for them to take somebody that had only worked in the back office, who was still relatively young, relatively junior, and move them to head up a new operation, with potentially hundreds of millions at stake in a different country?
Yeah, it probably wasn't normal, but if I go back to me in those formative years, if you like, during my time both at Coutts, Morgan Stanley, and Barings, I was very good at my job. I was very diligent,
Yeah,
I was highly accurate, and everything that I did quite easily, and that's how the move came to Hong Kong. I went down to Jakarta to solve a problem for Barings that they had there at that time. Was then elevated to this business development role. So I was definitely on a very good career path, upward trajectory, and doing very, very well. And I definitely come from a very working class background. I grew up on a council estate in Watford, and was able to, I was quite socially adept as well, which I think worked in my favour during that particular period, and was moving through the ranks at every bank that I worked for very, very quickly. But then it all came unstuck. The age of 25, when I moved out to Singapore, and by the age of 28, I'm starting a 6.5 year prison sentence in Singapore, and that's how quickly it really went wrong.
yeah. I mean, how do you think? Looking back on it, you told the story about how you kind of got away with it or worked out you could game the system via time differences and sort of hide losses and work out and sort of almost trade and wait until the market moves back in your favor. I mean,
Mm.
what do you think? How do you think things could have turned out differently? And what advice would you give to somebody now who might find themselves in a similar situation? Like you're in a bit of a hole, you have the opportunity to either report it or sit on it. What advice would you give them to avoid making the same mistakes and going down the same path?
Look, I mean, the first thing is you always act early. The first loss is the best loss, and I think even with the act early advice, I think it stretches through every walk of life, be it whether it's your health, whether you have financial difficulties, or whether it's something that's happening in your business as well. The simple thing that I could have done on any given day was ask for help. And I never did that. I was 25 years of age at the time. I thought that I could cope with anything. I hadn't really encountered anything up until that stage that I couldn't cope with, and I rather blindly stumbled my way through it. I think, like you made the statement that I worked out how to game the system. It wasn't really the case. That was over time. From the very beginning, because I'd worked in settlements, the checks and the controls were all really, really simple. And you expected a
Yeah,
knock on that door every single minute of every single day. Every time the phone went, you thought this was the person that was going to expose you. Every time there was a knock on the door, you expected somebody who was going to come through and show you the illegal 5/8 account, which is where I secreted the losses, and say, what's going on here? But it didn't happen. And, you certainly, over a period of time, you become a little bit numb to it. You start to think like the only
yeah,
way that I was thinking during that period, Stephen, was I've got more time to correct the situation. So in the beginning, you're very
yeah,
much, you're like a cat on a hot tin roof, and you think you've only got minutes or seconds to try and turn this stuff around. But then when people don't ask the difficult questions, you start to think that you've got more time. You've got a week, you've got a month, and you start to think in terms of a broader time horizon. And that's where it starts
yeah,
to get really, really dangerous, because people aren't asking those difficult questions. And that's really what it comes down to. Wherever you see financial scandal or financial wrongdoing, somebody isn't or doesn't feel empowered enough to ask the difficult questions. And that comes down to
yeah,
culture and conduct around the organization.
yeah. So, I mean, how did you manage to pull the wool over your superiors' eyes back in London? Supposedly, more experienced, financial professionals, either working with you out there or back in London. And what kind of advice would you give to anyone managing teams now who might potentially see some of their staff do this? What advice would you give them to spot this behaviour?
But yeah, I mean, I was able to overcome the issues in terms of secreting the losses rather too easily. People wanted to believe, and I think that's human nature sometimes. There is an inclination to believe what you're seeing, especially where a bonus is going to be paid on the back of it. So everybody wanted to believe these fantastic profits were being reported, that they were real, and their bonuses were going to be paid at the end of the year. Now, that wasn't something that I was deliberately playing into, but you can see that that's going on in the background. And it really was a case of, like I'd get to the end of the month and the accountant would come down and look for the balance sheet. And I'd say, then I'd start to worry about what she was going to look at in the balance sheet. But the check that she did was very superficial. She'd only look at the account balance line. She wouldn't investigate the amount of money that we had with the exchange. So nobody was joining the dots together. Everybody was operating in their silos, doing their jobs, not comparing information, not talking to each other, not communicating, and not asking those, like, they weren't even difficult questions, the way that the fraud was perpetrated at Barings. Sometimes I laugh, and I know we've got some other stories that we're going to talk about, but everything is described, or it tends to be described as sophisticated and complex. But in reality, it very rarely is that. It's very crude, very simple, and it's almost as if it's a confidence trick or a confidence scam in order to continue to perpetrate what's going on.
Yeah. So we just got a question coming in from the audience.
Sure.
Oh, sorry, Nick. Just a question that comes in from the audience now. Does culture supersede controls and regulations?
I think they work together, to be honest with you. There's a phrase that sometimes I use, which is that structure should out-trump conduct. So it's important that you have the systems, the policies and the controls, that they're robust, they're effective, and that people are aware of them. But then conduct also has a huge part to play. People, should be, recommended that they ask for help and advice, that they act early, not to be scared of making mistakes. I was horrified of making a mistake, because that probably, in my own mind, that was failure and that meant the end of my career. But just to answer the last point that you asked, what would I advise people to look for, or what would I advise them to do in terms to stop this sort of behavior before happening again? The people in those roles have to be very, very good. They have to be, the role has always been that the traders seem to have, or they have always had, the upper hand in terms of the way that it's looked at within the organization. But the controllers, the compliance officers, the risk managers, they need teeth, right? And they need to ask the difficult questions. And if you're a trader sat there and you're thinking about doing something wrong, whether it's insider trading, it's marking something incorrectly, it's rogue trading, running a position that you're not supposed to run. If the person controlling you or looking after that part of the business is good, they're going to catch you, you won't do it, because nobody wants to fail in the financial markets, and everybody working within those firms wants to get as far as they can. That's why they're there.
Yeah. So it's very much kind of, everyone's on the same page. I mean, did any of your supervisors or, anyone else get punished in any way? Be it, bonuses taken away, banned from working in the industry, going to prison as well? Or was it really just you that all of this fell on?
Well, it was me that most of it fell on. I think there were four or five directors from London who weren't paid their bonuses. I think they were banned from holding similar positions for a period of 4 years. Some of them worked back in the industry after that sort of period. Others have moved on to do other things. In terms of criminals and in terms of crimes, did they commit any crimes? Absolutely not. Everything was me. It was me that perpetrated everything, and it was me that was rightly punished and went to prison in Singapore. I don't think anybody should have been my roommate, so to speak. But I think the criminal prosecutions were rightly handled. There was a lot of people who were negligent, complacent, not particularly good at their jobs at that time, and they have to defend that, those accusations themselves. I put myself very much at the forefront of that, and accept responsibility and accountability for everything that happened during that particular period.
Yeah. So another question we've got coming in from the audience is, No one asking the difficult questions, operating in silos, taking things for granted or at face value. How should organizations, build into their systems methods and processes to break these accepted behaviors?
I genuinely think it's about empowering individuals to feel comfortable enough is probably the right description, or brave enough to ask those difficult questions. It's very easy as a trader to shoot somebody down, and then they don't think, psychologically they don't think they can go any further. But if you've got the detail to back up what you're thinking, you escalate it along the line managers, and really pursue the issue. It's for many years in Singapore, I was able, and many of the answers that I gave to people were completely nonsensical. But because I was confident, bordering on brash, they would accept those answers because they didn't feel in a position that they had enough knowledge to challenge me any further. And that has to change, and I think that comes down to culture. We talk about big banks and big banks being too big to fail. They're also too big to change. A lot of what goes on from a culture perspective is ingrained within the organization. So if you look at
Yeah.
situations occurring within certain banks, they reoccur from time to time, and it's because of the culture, and they're not able to change that about.
Yeah, exactly. I mean, that segues nicely into what I want to talk about next. I mean, seemingly things haven't changed much in the intervening years, between you out in Singapore with the bearings in the 1990s. I mean, the one bank that we've been covering a lot at the FT lately is Credit Suisse.
Sure.
It's everything from boardroom battles and spying scandals, in the C-suite, to 5 billion trading losses on single over-leveraged family offices, to selling 2 billion worth of dodgy bonds to Mozambique for fake tuna boats. And then of course a scandal which we've been sort of writing from the very start here at the FT. His Credit Suisse's links with Lex Greensill and by extension Sanjeev Gupta. I mean, what do you make of, if we take Archegos, the trading loss, which you'll probably be sort of most sort of familiar with and how that came about? From what you've read in the media and what do you make of this scandal? Like, how can that still be happening on such a huge scale in a supposedly sophisticated, investment bank?
Yeah, it is astounding. There is no other word for it. And if you look back over the scandals over the last number of years, Credit Suisse appear far too often. So that does suggest that there is a far bigger issue within the organisation. And if you look into things, just in terms of the types of products that were being traded, sometimes these are little understood financial products, and I think that was the case with Lex Greensill, and even with the family firm issue around Archegos as well. It should attract more attention. People should be delving a little bit deeper and trying to find out what's really going on, because wherever you see financial scandal, I guarantee you that the information is always there. It's just whether or not you're looking for it in the right place, and whether or not you're using it appropriately. But to build up the size of positions that Bill Hwang had in that family office across the 5 or 6 different investment banks is astounding. They can't have been talking to each other. The regulators weren't looking at the patterns of trading that were going on within the markets at that time, because it's heavily invested in one, a small number of stocks. And it's astounding. Bill Hwang himself had been charged with insider trading or something similar a few years before and banned from the industry for a period of time. So it must attract more attention, and it seems to attract less. And I speak around the world for lots of different firms, and I was with a big fund manager recently, talking about conduct and things like that. And one of their lawyers was there, and they were looking at some of the more recent cases in relation to prosecutions that have gone on in the UK. And very rarely do you find somebody who's in a rogue trading situation or an insider trading situation within the bank who's looking to profit personally from it. So you have to question them, why do they do it? And sometimes it's simply to maintain the status within that organization. So the status within the bank they work for. There's definitely a hierarchy, and traders want to keep themselves up there. And I think banks or certain organizations are at the same. I was thinking about this and, trying to work out, and some people won't like the characterization that I'm going to give, but trying to think why Credit Suisse are so often involved in these type of scandals. And if I was to look at the world of investment banking, and this is a real crude view of it, there are probably three or four banks at the top table. You've got your Goldmans, your JP Morgan, Morgan Stanley, and you can all add in your own bank there to that number. Credit Suisse aren't quite there. And I think in one of your articles that I read, Stephen, it talks about swimming with sharks, and there's a certain element of that. But I think also that Credit Suisse want to get to that top table. So, the question I would have is, are you taking more risks in certain situations because you think that's how you're going to get to that sort of level? I think the example that when I was reading some of the stuff about Greensill was, Lex Greensill being taken out to Asia and giving his speeches about what was going on with his business, and Credit Suisse pretty much saying, we need more people like Lex Greensill. Well, they got one. They got Bill Hwang.
Exactly.
And what good did that do them?
Yeah, I mean, it's a very finely balanced, though, isn't it? Between encouraging people to take educated and remunerative risks, and between working out what could tumble over into the line. I mean, I guess when you look at the Credit Suisse situation, you see the same things that you brought up. This willful, this willingness to believe stories which don't really hold up to scrutiny, and try to keep the show on the road. But I think another thing that Credit Suisse did in particular was they kind of gutted their risk function and fired a lot of more senior people. It was called juniorization in this long report that they released, and it did precisely what you described before. It left too few people with kind of the confidence or knowledge or position and status within the bank to actually speak up and stop it. So I guess my next question would be, if you were Antonio Horta-Osorio, the former Lloyds CEO who's gone over there as chairman to clean this up, what would be your first few moves to try and reset the culture?
It's a tough one. As I said to you a few minutes ago, I think some of these organizations are just so big that changing the culture across the organization is virtually impossible. And so, I look towards some of these new banks that are coming on the scene who've got a blank piece of paper from which to start, and it's about empowering their people. It's about allowing their people to challenge. You need to give them the education and the skill set to be able to do that as well. Very much when I was at Barings in Singapore, everything was very sink or swim. You learn on the job. You might have a mentor who tries to help you around that journey, but there was no real support function. And I just think, when I look at this, and I suppose I've been asked about these sort of scandals since 1999 when I came back from Singapore. And, the oft asked question is, how do you stop them? It's almost impossible. We've gone from a situation where there aren't too many road trading scandals now. You do get these big blow-ups from time to time, but the monetary effect of the scandals that we're seeing now is huge, because if one does get away, it just mushrooms out of control really, really quickly, as did Bill Hwang and some of the others. Just going back to Credit Suisse, people talk about near misses and learning lessons from near misses. Credit Suisse had lots of, not near misses, they had lots of big hits. You're looking at losses that they had with Canada Goose and some of the other issues that they had along the way. So this is screaming, your system does not work. Your risk management control function is not doing what it's supposed to do. Let's do something about it. But, people tend to, I think I read a comment somewhere saying that, all right, thanks for your concern, but we beg to differ. We're okay with what's going on within this organization. And I was actually sat at home watching CNBC or one of the TV programs at that time when the CEO came out and said that, very early on within the Bill Hwang story, there is nothing wrong with our risk management system. And everybody knows that there has to be something serious wrong, but it's all about deflect and push the blame somewhere else, or try to get away with this as long as we possibly can. But probably too much on Credit Suisse by now.
Yeah, I don't think they'll be
However,
having you for an after dinner speech anytime soon. Um, um, so, I mean, just in, you say that you can't stop. You can do your best control, but basically you can't stop these type of things happening. Partly human nature, partly the kind of culture and the type of people that are attracted to the industry. But there's a big debate about whether fines at a company level actually work, or do they
yeah.
just punish shareholders and punish the corporate entity? I mean, do you think that more personal accountability and punishment needs to be brought in order to make people think twice about this behavior? I mean, is our current the way that we currently punish, financial scandals fit for purpose?
Well, I think it's getting better. You look at some of the cases, like if people are prepared to do something wrong, then they have to be punished. It's you look at the Tom Hayes sentence that was handed down a few years ago. I think that sent a very strong message to the industry. And you're still going to get isolated cases where people will seek to take advantage, and it's very premeditated. And that's why your systems and your controls and everything need to be as robust as they possibly can be. But yeah, look, if there is any wrongdoing, I think of some of the other professional bodies, the accountants, they name and shame if somebody is kicked out of the industry. I think there needs to be a bit more than that or a bit more of that, because if you look at the financial services industry, everybody wants to succeed. Everybody wants to move up the chain of command within the organization. You get this funny situation where a lot of people get to mid-management. There's nowhere else to go, right? So those people just don't want to rock the boat. They pick up their salary at the end of the month and they don't ask the difficult questions. Does anybody want to be a whistleblower? They wouldn't have been years ago, because whistleblowers tended not to get recruited back into the industry. So I think that mid-management role has a real issue. How can you employ those people better in order to enable them to ask the difficult questions? I don't have the solution, to be honest with you. I do worry that the bigger organizations are quite difficult to change. And even if you get these, like I think the big white hope a few years ago was the millennials, the new millennials coming into the banks. They had a totally different approach to life, what they wanted to achieve, how they wanted to be more meaningful to society. But they get into the banks and they get corrupted fairly quickly, and they get corrupted with some of the things that are going on and some of the things that they see, unfortunately.
Yeah, they'll learn their behaviors from the kind of people around them. Now, there was an attempt to kind of make senior people more responsible for the actions of their subordinates in the areas. It was called the senior managers regime, brought in the UK. The ultimate sanction is you could end up in prison. I mean, obviously we haven't seen anything like that yet, but I mean, do you think that's a step in the right direction? Or do you think it's, kind of a bit distant and a bit toothless?
Yeah, it's a strange one. I think the first time that I went to do a talk for one of the big law firms about the senior managers regime must have been 8-9 years ago, when it was in its first infant stages. So it's taken an awful long time to grow those teeth. And, I think it needs the teeth. That people need to understand that this is going to happen if you don't do the right thing and you don't do what the business expects you to do. And I think you've hit the nail on the head, really. Until we start to see some cases brought through that senior managers regime, it does remain toothless to this day. I think the idea was good. How it gets implemented is the key, and what's really going on in reality. I think a lot of what I see within the banks is a lot of that responsibility is being pushed onto the first line of defence and the people who work within that particular area. So it's not, you're going so far up the chain, but you're not really getting to those people that should be implementing things and making sure that the culture is correct within the organization to make sure that it doesn't happen. So I think it's getting to a certain point within the banks, but not all the way to the top.
Exactly right. If you were a regulator, are there any other rules, large or small, that you would bring in?
No, I don't think I'd ever be a regulator, number one. But I think the regulators, like conversations that I've had over the last few weeks with people, the regulators are definitely getting better. I mean, risk managers, compliance officers, the people in those roles have improved significantly over the years. I think the same is true of the regulators. They're delving deeper than they ever have in the past. There's still work to be done, and unfortunately, I think again it's the nature of the beast. The banks are always going to be a few steps ahead. You've just got to narrow that gap as much as you can. So, I think I had with all the things that happened with me in Singapore all those years ago, I had a very narrow ethical compass. I was just thinking about what was happening to me in that small part of the firm. I wasn't thinking about shareholder value. I think regulators really need to enforce what the potential consequences are for people, and ethical challenges that you face during your career are going to change. And I think there probably needs to be a little bit more teaching in that regard. It's, ethics for me is an applied science. The challenges, the pressures that you're facing are changing all of the time, and how you react to those is going to change. So possibly a little bit more training in that regard.
Yeah, and not just doing the kind of every 6 months the multiple choice exam when you're
Yeah,
sort of half eating your lunch and doing something else. There has to be kind of more kind of formal training than that. I think.
absolutely.
And one of the things you mentioned before is this idea about whistleblowing, and then I'll get onto some more of our audience questions. I mean, whistleblowers can be very handsomely rewarded these days. We're talking sometimes
Yeah.
tens of millions of dollars, especially in the US. Surely that's a strong incentive for people to start speaking up about their behavior. I mean, if they get enough money, they might not actually have to work again, let alone you would be worried about being stigmatized.
Exactly.
There
I
any?
mean, that was one of the discussions I had with one of the fund managers recently. It's become such a big incentive that if somebody sees some wrongdoing, there's now a fear that they'll hold off bringing it to the right people's attention within the firm and go straight to the SEC. I think there's, just over the last year or so, last 18 months, there've been two payouts of $100 million, and it's
Mm.
I think it's 30% or something of the sum that is recovered, that the whistleblower gets paid. I try to think back to any whistleblowers who then came back into the industry over maybe the last 15, 20 years. There aren't any. They tend to be to be kept away from it, not re-employed. And now you've got a situation where if somebody whistleblows, they don't need to work again. So the worry is that people are holding on, waiting till it gets to a certain degree of financial sum, and then they expose it. I suppose the other way that works is you might have two people looking at the same situation and they're working out who goes first. But there's definitely a worry about it amongst some of the firms that I've been speaking to.
Yeah, there's a bit of a conflict of interest. I mean, still probably broadly good that the
Yeah,
behavior is eventually flagged, but it's you're right that there could be sort of a perverse incentive to let it fester and get much worse, increasing your reward at the end. We've just got about 5 minutes left now, so I want to bring in some audience questions. One is, how concerned are you by the rise of crypto trading by banks and institutional investors, i.e., moving out of the kind of online day trading and getting more links into the financial system? Because the entire point behind cryptocurrencies and blockchain is that they're non-fiat currencies, not controlled or regulated to the same degree. Surely we could see crypto corrupting parts of the more formal financial industry if it does become a more established part.
yeah. Well, it's been associated with money laundering since inception. It's not something I really understand from a
Mm.
concept perspective, and once again, you're getting into a market which is understood as it should be. So, where are the crypto experts within the banks who are really going to trade, look after this and control this? So it would be a worry. And, you just look at how crypto has changed over the last few years. Every time that something has been brought in from the finance industry, so futures trade on crypto, the market goes up,
Yeah.
collapses 80%. They bring out ETFs as they've suggested recently. Prior to that, Coinbase, the IPO came around, market scooted up again, lost 50% thereafter. So they've definitely got more credibility, I think, than I've seen in the past. But yeah, it's something I don't understand, so I try to avoid it.
Yeah. Another audience question: if somebody had spotted your very first mistake, and if the trade and position had been rectified, would that have saved the bank and you ultimately?
Yeah, look, I mean, it would definitely have saved the bank. I mean, the first loss was something like $10,000, so that increased to £682 million over the period. So it would definitely have saved the bank, and pretty much any day since then, or since that period, right up until probably the end of 1994, would have saved the bank. Then it just, as the markets were collapsing, my position was increasing dynamically. I can give you episodes of people that worked in bearings at that time in other locations who marked to market or kept positions incorrectly. They got fired by bearings. They went on to work for other organizations, and a couple of them are the biggest volatility traders in the world these days. So that's why you asked me earlier about conduct and about systems and controls and regulations. They're there to keep you in control. But if you push them and you push them further away, that's not controlling your behavior. And a lot of people can do that themselves. Other people need those rules and controls to be as robust as they effectively can. So it would definitely have saved me as well. I don't know if I'd still be working at bearings. I couldn't say that, but I might still be in the finance industry.
Yeah, and just when the level of stress, that when these positions are building and that must be going up. I mean, some of the other rogue traders, like Kweku at UBS. How do you cope with that on a kind of day-to-day basis? Doing your actual job, still trying to make money while still covering up past mistakes. I mean, is it just one of these things that certain people can stomach, or does it lead to even more mistakes and other bad behaviors?
It leads to even more mistakes and even worse behaviors. I mean, it's all a tissue of lies. So, I don't even think you're thinking about how to make money. It's about how to keep this position going and how to buy yourself a bit more time. So, for me, throughout that whole period, everything was about avoidance. So I was avoiding the realization of the losses. I was avoiding the realization of my own failure. And one way that you do that is that at the weekends, you go to Hong Kong, you go to Indonesia, you go to the Philippines, and you get yourself out of Singapore. So you're avoiding Singapore point blank. And then the other coping strategy is the worst possible coping strategy, which is alcohol. And you inoculate yourself against some of the things that you're really thinking about. And that complete Jekyll and Hyde type of existence where you are the only one who knows the reality of what's going on, and you're surrounded by people who are buying into the success story, be they employees, be they your employer, or people in your domestic situation, your wife and family. And that's a status thing, and you try to keep all of those relationships afloat, and ultimately it all comes crashing down upon you.
And there's almost a sense of relief when it all ends.
Yeah, I don't know. I mean, I think that's kind of the way that everybody perceives it. I think the relief was as soon as I left Singapore, you're then going to face a prison sentence. So you've left one degree of uncertainty behind, and you've now got another one. And
Yeah.
there was a lot of speculation then about how long my sentence was going to be, up to 84 years in prison. So you've got other things to worry about. So I think the cliche would be to say yes, it was a relief, but I'm not so sure that's really accurate. It was more a case, I'm out of one frying pan, I'm in a fire now. What am I going to do?
Yeah. So not an experience you recommend to anyone else then, I suppose.
Absolutely not. No. Although I would have
Okay.
enjoyed somebody's company whilst I was in prison.
Okay. Well, Nick, we've come to the end of our time now. It's been a fascinating chat, and thanks to our audience for all your questions as well. Hope to speak to you again. Maybe next time we can do this in person, Nick, when it's all allowed. And thank you very much. And to our audience, please stay tuned for the next session.